Good morning. Welcome to Top of the Morning by Mint, your go-to weekday newscast for the top 5 business stories. It's Friday, December 20th, 2024. I'm Nelson John. Let's dive in. Jan Aushadhi Kendras, part of a government-backed initiative to provide affordable medicines, have been on an upswing, hitting sales of 1,000 crore rupees this year. These centers have become so incredibly popular that some private firms are now getting in on the action. Take, for instance, a pharmacy in Mumbai that's named after Jan Aushadhi, but isn't actually part of the official scheme. It cleverly uses the Jan Aushadhi brand to draw in customers looking for low-cost meds, even though it is for a profit entity, and sells branded generics too. This situation highlights a broader trend in the market, writes Jessica Jani. While the official Jan Aushadhi Kendras are booming with their highly affordable generics, there's a growing space for hybrid centers like this Mumbai pharmacy. They offer both cheap generics and higher margin branded drugs, ensuring no customer leaves empty-handed. Micromax has teamed up with Taiwan's Phison to carve out a niche in the high-end storage market with a new joint venture, Mii. The venture, with 50-45 split favoring Micromax, has already started manufacturing solid-state drives, SSDs, at Micromax's facility in Greater Noida. Speaking with Mint's Kulveer Aulak, Micromax's co-founder Rahul Sharma said that he was bullish about leveraging Phison's technology to cut GPU costs dramatically, aiming to slash the price to just 1/10 of current rates. This bold move is expected to shake up the AI sector not just in India, but other strategic markets as well. Mii plans to capitalize on Micromax's strong Indian client base and Phison's cutting-edge NAND storage solutions to target a diverse range of industries. While the specifics of the facility's production capacity remain under wraps, the focus will be clearly on sectors such as automotive, IoT, and mobile devices, among others. Your next packet of biscuit may feel a bit lighter because of a sneaky tactic known as shrinkflation. This trend, along with outright price hikes, is on the rise as companies such as Britannia, Parle, ITC, and Godrej are struggling with rising costs of ingredients such as wheat and oil. This is pushing up prices of everything from biscuits to soaps as much as 7%, industry insiders told Sunita Tandon. Ranjit Singh Kohli of Britannia said while the company plans to increase prices by 3 to 5% over the next few quarters, it will try to absorb some of the increased costs. This may mean smaller product sizes rather than higher prices. Meanwhile, Parle has already started adjusting prices and pack sizes and expects to roll out 5 to 7% price increases soon. India saw a similar phase of shrinkflation in 2022, which ended in mid-2023 as ingredients costs normalized. However, with the current economic pressures and persistent high inflation, FMCG companies are bracing for a challenging period ahead. India saw a dramatic surge in its trade deficit in November. It hit a record $37.8 billion because of a fourfold increase in gold imports to nearly $15 billion owing to higher demands during the festive and wedding seasons. This surge in imports, alongside with 4.9% drop in exports, widened the deficit significantly. The substantial rise in gold purchases and a decrease in petroleum export earnings fueled the gap, explains Dhirendra Kumar. Merchandise exports dipped from $32.11 billion from $33.90 billion last year, while imports rose to $69.95 billion from $54.48 billion. The stark imbalance raises concerns about the slowing of India's manufacturing sector, which seems increasingly reliant on imported components and raw materials. The decline in exports suggests that domestic manufacturing struggles to compete globally thanks to high logistics and production costs, indicating a pressing need to bolster India's manufacturing capabilities. On December 18th, Sebi greenlit a slew of amendments aimed at refining operations, safeguarding investors, and boosting market participation efficiency, especially targeting SMEs, merchant bankers, and mutual funds. Among the most anticipated decisions is the overhaul of the SME IPO framework. This reform is pivotal for small and medium enterprises seeking to tap public capital markets. Sebi has now stipulated that SMEs must demonstrate a minimum operating profit of 1 crore rupees in 2 of the previous 3 financial years before they can file for an IPO. This aims to ensure that only financially robust SMEs can access public funding, thus safeguarding investors. The establishment of a past risk and return verification agency marks another significant stride. This new body will authenticate the risk return metrics provided by the financial services providers, such as investment advisors and research analysts, ensuring investors receive reliable and standardized data. Ms. Sneha Joshi breaks down all the changes and amendments from the Sebi meeting. That's all for today. You can also listen to the Top of the Morning episode uploaded every weekday at 6 a.m. Be sure to check it out. Thank you for joining. I can't wait to bring you the next Top of the Morning episode, which will be packed with the latest in business news. Until then, have an awesome weekend.